balance sheet, how the PER appears in the balance sheet. So I found a balance sheet online. Its
Yeah.
name has been hidden. So it's
So,
under the liabilities, as you can see my screen. So we
okay.
have the profit equalization reserve, and also it is appearing under the share capital for the portion of the PER from the shareholders. So it's appearing both under the equity as well as the liabilities.
Now, under liability, does it, does it say that this is the share of depositors of the PER?
Yes, Professor, if you see, it just mentions under the deposits. This is the deposit section.
Okay.
Savings deposit, general investment, special investment deposits, and then
Okay.
PER
Now, which
of
bank
the.
is this?
This is actually, they have made it confidential. They have hidden the name of the bank.
Oh,
So they have, yeah. So
how come? I
it's
mean,
from Malaysia. It's from Malaysia, but this is just
but
for
annual
illustration.
reports usually do not hide the name of the bank always. Yani. Why the name of the bank is hidden? It should be, unless if it is in a different context. You didn't take it then from an annual report.
No, no, no. I took it from a paper, and then they are reporting it
Okay,
for
okay. So
illustration.
in a paper, yes, they may hide
Yeah,
the
yeah.
fine. But now,
May I add something, Professor, with your permission?
excuse me,
May I add something in this regard?
who want
Mateen,
to speak?
Mateen Beg. Mateen Beg.
Yes, please.
It is a regulatory requirement in Pakistan that 50% of the will go in the liabilities and 50% will go into the reserves. Here it is 75% in the liabilities and 25% in the reserves of the total amount.
This is Malaysia. This is in Malaysia.
It is 75% in liabilities and 25% of the PR in reserves. While we have in Pakistan 50-50%.
Okay. Now, and I wonder why it should be either way, or is it not? I have another reservation on this balance sheet that we should also. I am going to bring it, but leave it for a moment. Why should it be 50 or 75% or any percentage other than really the share of depositors and the share of shareholders? Because we are taking it from the profit before distributing to shareholders and depositors. So it should be exactly in the same share. If we add part of it to equity, we cannot really, and we will be cheating, rather, we will not be transparent if we add any percentage that is different than the real share that is taken from the shareholders into this reserve. So whether 50 or 75%, in my opinion, is incorrect, inappropriate, either way. The other point I want to mention here is that liability, we do not call and according to the accounting standards of the AWOFI, you cannot call depositors as liability. They are not under liability. Rather, the accounting system that is suggested by the AWOFI is that we should have a category which is next to the category of shareholders' equity. We call it depositors' equity. So deposits on Mudaraba definitely are not liability. And if this share belongs to them or relates to them, we take it also under that same category. That's an added category. In other words, we have on the liability side, we have liability, we have depositors' equity, and we have shareholders' equity. So both ways, then, whether 75% or 50%, in my opinion, it is inappropriate to claim either way. What is the right way is to show the real percentage as it is between depositors and shareholders' money. The second question in this regard, in this matter, is the issue of how do we, when we assign profit, when we distribute profit, take that example here, the 1.66. This is total profit. And we have the relationship between equities and deposits of shareholders, or shareholders' equity is 60-40. Now, how about the other reserve? Is the reserve here considered? Bring us back this balance sheet, please, yeah, Hassan. The balance sheet, yes. Now here, do we consider that as the PER that is part of, that belongs, say, the part of it that belongs to depositors? Do we consider it in the distribution of profit as a depositor also? Or how do we treat it? To the best of my knowledge, in banks, what they do not consider that at all. Put it in a better way, the IRR in, or to be specific, in Jordan Islamic Bank is not assigned profit as part of the total. And the IRR in Jordan Islamic Bank, if anyone can get us the Jordan Islamic Bank balance sheet from any report, you notice, because Jordan Islamic Bank is probably the first or second or third Islamic bank, not the first, but second or third Islamic bank ever existed. So it is now functioning for almost 50 years. And for all these 50 years, they have been taking reserves, and in no case they used this IRR reserve in distributing profit. So it is accumulating, and the amount of it, most likely, I remember checking it several years ago, it was almost equal to the equity of shareholders. Now, this is a huge amount that makes resource part of the resources that are being utilized in the bank. And these resources that are utilized in the bank should be assigned their share of the profit. And the share of the profit would increase that amount. In my opinion, it should go to that same account, like treating it like any other depositor. And it should go to it and increase it, and then apply on the total whatever maximum percentage that regulations may require. To my knowledge, there is no such regulation in Jordan, so it can accumulate forever. Now, if there is a regulation in Pakistan not to exceed 30% of the total deposits, I'm sure that should apply. Does it apply to the share of the depositors alone,
Since mobile
or
data is
the
turned
share
off,
of
you'll have
both?
to connect to a Wi-Fi network.
Okay.
Yep, the PR ratio should not exceed 30%.
Of the total deposits, right? But is it the total PER or the share of the depositors of the PER, like we have it here? Which one that should not exceed 30%?
The total. Actually, the calculation, if you permit and if we have time, then I can show you the actual calculation done in the banks for PR calculation on Excel sheet, but I don't think so.
No, tell me, how is it?
This, what thing? 30% of the total deposit should not exceed, the PR should not exceed 30%, and the amount in the PR will be invested in Pakistan, usually invested in SLR dominated securities, Sharia compliant securities, which are SLR regulated by the central bank. And the profit distribution will be done in the ratio of 90% to 10%. 10% goes to the bank as Mudarib, and 90% usually goes to the owners of the this deposit.
But of course, the owner of the deposit is simply the account. There is no owner, right?
When it is returned back on the place from where it was deducted, then with profit it is goes back to the place from where it is deducted.
What is deducted? It's not what is deducted.
For example, this is the month of April, and we have deducted 2% PER. And on that month, for in the April, the amount is exceeding the total reserve in PER is exceeding 30%. Then the amount is returned back to the place from where it is deducted. The reverse entries are made.
No, yeah, Mirza, let's put it in a better wording. Then there should be no deducting. If we have reached the 30%, they would not deduct the 2% every month. That's what it means. So whether deduct and return doesn't make really sense. They shouldn't deduct it if they have already reached the 30%. That's not the question. The question is the profit of using these reserves. If they are to be by regulation in Pakistan, they are to be used with these special securities that are Sharia compliant. And the bank takes 10% as a mudarib. And of course, when we say the bank, it means the shareholders. And the 90% goes to where?
To
The
depositors.
profit. Now the profit. There is no depositor here. What do we mean the deposit? Depositors where we took this amount. Suppose this amount has reached 30%. So it is a huge amount. 30% of deposits means about 20% of total resources available to the bank, more than the equity. So suppose we have reached this amount and we have this amount. Then the profit that is generated by utilizing it in these special securities, the 90%, as you said, where should it go? We distribute it to the depositors. These depositors are, the amount was not taken from the current depositors.
Yes,
From the current deposit, please let me continue. In this assumption, we have already reached 30%. Current depositors do not even contribute to it. We don't make deduction anymore of the PER. So but we have this amount, which is a resource that we are using it for, as you said, in these securities. Then the profit generated by that from these securities goes where? Go ahead and answer.
Yes, Professor, we have a PER pool. First of all, it is a pool. Okay, the funds are invested through this pool in SLR Sharia compliant securities. The profit which is generated is returned back to the pool. Then in any time period, the pool amount should not exceed 30% of the deposit. Any amount, for it is a discretion of the bank also. For example, if the bank wants to maintain 30% all the time, then any amount, including the profit amount, if it exceeds 30%, the total amount is returned. The amount exceeding is returned to the same place from where the PER was deducted at first place.
But notice here, Mirza, there is the same kind of injustice that we are talking about applies also here, because current depositors are not depositors from whom the PER is taken. Under this assumption, we already reached the maximum 30%. So you distribute to current depositors, you give them like a gift to depositors that they do not deserve it. Because this amount was taken from previous depositors over the past 30 years, not from any 1 year of them. And here where the AWOFI requires that it only talks about the time of liquidation of the bank, of dissolving the bank. If the bank is to be dissolved, goes bankrupt, then the PER should be given to charity, not to depositors, because those depositors that are at the time there are not the ones from whom it was deducted. And it is not fair to give them. Why give them simply a prize because they happen to be with us at this moment? That's an unjustified prize. So to go to depositors where it was deducted, it cannot, because depositors have gone from whom it was deducted. And the AWOFI standard requires only when we, because it doesn't talk at the time when we still are working, the bank is still functioning and it has excess in this reserve. Now, if the profit, then according to the regulation in Pakistan, the profit should be credited to the same account, not returned to depositors. Because, and if it says return to depositors, then it is a wrong regulation. It shouldn't be, because the depositors are not the ones who from whom it was deducted. Okay. Now, in banks that that are not listed in the exchange, the assumption that all shareholders most likely are still the same. And that applies definitely in the Kuwait Finance House, because none of the prince, the one who died, not the present one, in fact, two emirs ago, not this emir, I think his name was Ahmed, Sheikh Ahmed, was the big shareholder. And then it was inherited by his heirs, whoever they were at that time. Sheikh Ahmed is the one who was also at the time of the Saddam aggression against Kuwait. He was still at that time still alive, and he was the owner, partial owner of the bank, and anyway was the emir. The other owner is Ministry of Awqaf, and also Ministry of Awqaf is stable, is not selling, and most likely also the main other owners are stable. None of them is expected to have sold its shares. So it doesn't matter when we talk about the shareholders when the bank is not listed, but for listed banks it makes even a serious issue here. It's again an issue of justice that Hassan referred to. It is important, so we keep it as this is in fairness. It should be there really, and it is a very important critical point of the way the banks are done. Yeah, Hassan, if you can verify what Mirza is said, if can Mirza send to Hassan, please, the regulation itself that says this, that 50 and 50 should be put it in the liability account or in the shareholders account, and also the one that says maximum 30% of the total deposits. What is kind of to me also looks unreasonable. Why should we take the PER as a percentage of deposit at the time that we really the objective of it and the concept of it, we deduct it from the share of shareholders as well as from the share of depositors. And when we distribute it, if we ever use it, we use it for both also. We increase the profit in the bad years. We increase the profit of shareholders, and we increase the profit of the depositors again. So if it is so, then why it should be measured only to to depositors, maximum 30%, and every month 2% maximum of the return to depositors? Well, it should be of the total profit, 2% of total profit every month, to a maximum of 30% of the total funds invested in the bank, whether shareholders fund or a depositors fund. Why it is attributed only 30% of the depositors total? Do you have an answer, Ya Mirza, to this question?
30% to other depositors.
Yes, I mean, why the maximum should be 30% of the total deposits, not 30% of the total of deposits plus equity, shareholders' equity. Because we are taking it from both of them, and we use them. We use it also for both of them. So why does your central bank say the maximum should be considered out of the total deposits only?
Because Professor, from my concern is that if we do the actual calculation of the pool management, then this issue will be resolved. Because the calculation is not correctly mentioned over here. If we do the calculation on Excel as per actually done in the banks, then this pool system and the PR will be understood.
Well, I think we do understand the PER and the pool, and you are using different terminology. You are free to use different terminology. There is nothing called pool. Okay, it's just one account. It's the accumulated fund. So there's no pool. Pool means you are pooling different things together, and that's not a pool. So this is an account, one account, not a thousand account, not different account. So it is one account. And no, we don't need the Excel of your calculation. That's
basically okay. This PR calculation is applied only to the Mudarba based deposits.
So in Pakistan, I mean, do they? You said in the balance sheet it should be shown 50% and close to Mudaraba and their liability, and 50% and their equity.
No, I'm saying that this PER ratio of 2%, maximum 2%, 1%, 0.7% is applied to the Mudarba based deposits only, to savings, fixed deposits for 1 month, 3 months, 6 months, 12 months. It is applied on the Mudarba pool only.
Well, it's fine, applied on Mudaraba, but it is applied on the profit, not on the Mudaraba. 1%, 2% of the total deposit we take, we cannot.
No, from
this
the profit.
Is taken from the profit. So yes. From the profit of the Mudaraba account.
Yes, and that profit is first distributed based on the weightages according to the tenure of the deposit. If the deposit is saving checking,
that's a different issue. That's a different issue, and that is controversial. There are many discussion on whether you can discriminate according to the time or not the time, or and how do you make the effective discrimination. That's different, and it is being discussed at different ground. That's not our issue at this point, and I'm not really interested in it. The point is, it is taken from the profit of depositors only, from the share of depositors in the profit, not from the total profit in Pakistan. Is that what you are saying?
Actually, Professor, for example, just give me 1 minute and please listen.
Okay. Well, go ahead and look at the thing and verify it. And
I'm telling you, just give me 1 minute to speak. First of all, there's a deposit of the depositors of the Mudarib pool. The bank invest along with the deposits of the Mudarib and makes its own investment in the form of the current account used by the banks. The total amount is, for example, is 1 billion Turkish lira. For example, the 1 billion Turkish lira constitute 50% Mudarib deposits and 50% banks deposit. For example, if the profit is generated is 1 million Turkish lira, then based on the ratio of 50%, the bank will deduct straight profit of 50% as their own investment. So the net amount is remaining belongs to the Mudarba pool.
No, wait, repeat that, please. We have 1 billion, and we assumed 50-50 depositors and equity.
Yes.
Then we got 1 million profit in that month.
In 1 million, we got profit of 1 million Turkish lira.
Okay.
Then the Islamic bank will deduct 50% of the profit because it is their money. The 50% money belongs to the Islamic bank.
It's not deduct. We'll divide.
Yeah, we divide, but you can say it is divided into two
Deduct.
parts.
Okay, we'll
50%.
divide it between these two.
Yes.
And then you have 500,000, that is the share of depositors.
Yeah, that's the share of depositor. Now the bank is also performing as a mudarib for the share for the depositors also.
Yes.
Then this profit will be distributed according to the average deposits maintained under the each category of saving deposits, TDRs, fixed deposit. The
Okay,
profit is,
we'll leave that. They
yeah.
distributed to depositors.
Now it is distributed to the
Not all of
depositor.
it, not all
Then
of it, because you have to take from this 500,000 the share of the mudarib.
not now, not now. Not now. First of all, the PER will be deducted. When the PER will be deducted, the remaining balance, then it qualifies for deduction of Mudarib share. The amount remaining after the deduction of the Mudarib share will qualify for IRR deduction.
But Mateen, this is exactly what is on the screen you see in front of you. This is exactly what it is here.
No, this is not exactly. No, what Mateen is saying is not what is there. What Mateen is saying, if you apply it to this example, that the PER is taken only from the 1 million, not from the 1.6. Because in this example, we assumed 60-40 shareholder depositors. So it is taken from the 1 million only, not from the total 1.6 million.
Yes.
Okay. So
Yes.
if it is taken from the 1 million only, okay, well, this is the application of Pakistan. This is not the PER that IFSB talked about. And this is not the PER that is known to everybody else outside Pakistan. The PER that is known to everybody else outside Pakistan, and the PER that is not and rejected, rather, rejected for practice in the Gulf countries and in many other countries, is a PER that is taken from the total profit that is in this example from the 1.66, etc. Not from the 1 million that is the share of the depositors before it is distributed between Mudarib and fund owner. So in Pakistan, apparently, according to what you are saying, which I doubt it is correct, though, most likely it is incorrect. Because it doesn't make sense. That's why should Pakistan select a different route that is not really understood commonly. If it is taken only from the shareholding of the depositors, again, part of that PER remains belongs to the shareholders in their capacity as mudarib, because we take it before distributing between mudarib and Rabb al-Mal. So part of that PER, probably this is why, Mirza, you have, because in Pakistan they have the general principle that the share of the Rabb al-Mal in Mudaraba in Islamic banks should not go below 50%, right? Am I correct in this regulation by the Central Bank of Pakistan? That the share of depositors should not go below 50%.
Share of depositors should
Yes.
not go below 50%. I didn't got it, your
In
point.
the contract, share of depositors compared with share of mudarib.
You are telling about Mudarib and Rabbul Mal share.
Yes.
It depends upon bank to bank. Some 550,
But I think
50%.
there is a regulation from the central bank that it shouldn't. Yes, it varies from one bank to another, and it varies also depending on that categories of the deposits. But to my knowledge, that the Central Bank of Pakistan requires that the share of Rabbul Mal should not be below 50%. And perhaps this is why when they distribute this PER, they put 50% of it. You said this is also the regulation under equity, and 50% of it I mean, combined with the depositors.
There is IOFI's Financial Accounting Standard number 11, Provisions and Reserves. It defines PER as this is the amount quoted, this is the amount appropriated by the Islamic banks out of the Mudarba income before allocating Mudarib share in order to maintain a certain level of return in investment for investment account holders and increase owners' equity, unquote. I have to just...
Okay. So according to AWOFI, then, it should be taken from the Mudaraba profit, not from total profit. Okay. And if it is so, could be then. And it doesn't really make much of sense because the displaced commercial risk talks about general reserves, not reserve only for the share of the depositors. And of course, if you take PER from the Mudaraba profit only, then why do you need to take, in addition to that, the IRR? The IRR becomes really an additional burden that doesn't make really much of sense. And the share of the Mudarib in the PER is not adequate to support the distribution to the shareholders if in bad years, because it's much smaller than what may be needed for the shareholders. So anyway, I wouldn't go for that. I still argue that the PER based on the displacement commercial risk should be taken from the total profit. Now, okay, if it is taken from the profit of Mudaraba only, means that shareholders have nothing to do with it. And although part of it will belong to shareholders being the Mudarib, then you cannot really use it for shareholders in that sense. It doesn't make sense to use it for shareholders. Of course, it's not appropriate in being inadequate for that.
I'm also cross-checking from IOFI website. If I got the exact quotation, I will send you the definition of PR and how it is deducted from as per IOFI.
Okay. Okay, that's fine. Send it to me. Thank you. طيب. So anyway, the criticism of the idea of the PER and IRR both remains the same. They disturb the market. They create a great injustice. And the third point is the assignment of profit to them that is not done in many banks, specifically in Jordan Islamic Bank, is not done in the appropriate manner that creates justice. Practically, implicitly, the profit of this reserve is distributed to current depositors and current shareholders. And the Jordan Islamic Bank is a listed bank in the Jordan market. Okay, continue, please. So they, what is the response to this?
One more point, Professor. According to some of the professors, they say that PER used to handle rate of return risk and displace commercial risk, while this IRR used to handle market risk, credit risk, and equity investment risks. What is your stance on that?
Yes, clearly. IRR is only specific for the depositors only and deals with the market rate. And but PER, yes, for both shareholders. If it is for both shareholders, then it should have been taken from both shareholders then, not from only the profit of Mudaraba. Okay, continue, yeah, Hassan.
Okay. Professor, I wanted to maybe discuss this diagram also from that paper. And what this diagram is saying is this PER reserve is invested in low risk investments. So it finances low risk activities and transactions, and the income from these investment of PER goes back to the PER. It increases the PER reserves.
Okay.
Yeah.
Now, what is this GIA one?
It's general investment account.
General investment account means what? Deposits?
Yes, it's a mudaraba, basically the 1 million what we were discussing here.
So general mudaraba, they mean
Yeah,
general
general
mudaraba.
mudaraba. Yes.
In contrast with specific mudaraba. So,
Yes.
I mean, deposit then. Well, I mean, okay, I mean, why should they be invent a new term? And we know the term that it is deposit accounts, not either investment account. The IFSB call them investment deposit accounts. So they are investment. They are not G. Okay, investment deposit accounts.
Yeah. Yeah.
Okay, so these are investment deposit accounts. We take the F is the deduction.
Is
What
the financing, and so P is
and
the
then the
profit.
P is profit, and then we take PER, and PER is returned. Here it says returned to the GIA. How come it's not returned really to GIA? So this the dotted arrow, is it really correct? It's reinvested, and it's not reinvested in the same investment as Mirza told us about Pakistan. It is not invested in the same. I mean, like the GIA is not invested like it. It's invested in a low risk, right?
Yes. Yes. It
Okay.
says LR, low risk. Yeah.
And the profit of it is added to the balance of it, is rendered to it. So
Yes.
these are then according to this diagram, the PER, the cumulative PER is invested in low risk, as in Pakistan, for instance, in these special Sharia compliant securities. Assuming they are mostly issued by the central bank itself. So they are invested there, and the profit is rendered to them. And again, if the profit is rendered to them, it may be fair to argue for what again is being practiced in Pakistan, that a certain percentage, though it should be low, like 10% of that profit in the low risk investment, should go to the mudarib, in other words, to the shareholders. And the 90% should be added to the balance of the PER itself, to the cumulative balance, until that cumulative balance reaches some maximum. And
30%.
then when it reaches that maximum, what do we do? Yani, now this LR, what is the LR here?
Low risk
But
securities, low risk.
but that arrow, it's incorrect. That arrow should come from the GIA. You see, it doesn't come from the GIA.
Sir, this dotted arrow, is it not for the displaced commercial risk case, in case the banks are using the PER to accommodate those depositors, mudarib depositors?
Yeah, well, this is like income reinforcement or income increase in income of the depositors.
For example, if the banks are getting lower rate than the market, so then they are compensating them to accommodate them and make the rate at par, which is basically the displaced commercial risk, to use this PER.
Yeah, probably this arrow doesn't mean that the PER goes there or belongs there. It is only when it is used for supporting the low year income.
Yes, yes.
Yeah, that's why I think they use the dotted line that it may use it.
Yeah, but the other line, that is the dotted line above and below the LR, low risk. Now the low risk has nothing to do with the GIA. It shouldn't come from GIA.
Yeah, it should come down from PER.
Well, it
No,
there should be.
I think what this is showing is the return from the low risk securities is added to the balance of the PER. This is what it is trying to show here.
Well, even if it is that way, there should be. It shouldn't come from the GIA.
Yeah, yeah. It should be a separate box. Yeah.
So that arrow shouldn't come from the GIA. Maybe leave the low risk where it is. Remove the small arrow above the LR.
Yeah. Okay. It's clear
Only
now.
if you remove that small arrow above it, yeah, this one, small one, remove it. The second arrow, the lower arrow is okay. But again, yeah, we got this LR from some different source. Okay.
Yeah.
So now we have an LR, low risk investment, that we invented somewhere, and the profit of it is added here, and then usually this arrow should be a solid arrow. Why dotted again? This lower arrow should be a solid, because in low risk there is always profit. You can always assume there is always profit in when you invest them in low risk, especially the way it is done in Pakistan with central bank low risk Sharia compliant, and they give usually a prefixed return like ijara or something like that. So that better be solid line. Yeah.
Okay.
Okay. And it's good to keep it in a different color.
Yeah.
That's better. Yes. So this is now okay. This investment, but the criticism of this whole concept remains. I think we have the idea. Go ahead now. What?
Yes,
Can we go to the next one?
yeah, Professor, it is a financial accounting standard of IOF number 35, risk reserve. This is new standard. Clause number 6, subclause number C, profit equalization reserve. It defines profit equalization reserve and its treatment.
So what does it say?
It says, quote, PR is the amount appropriated by an IFI out of the income arising from the assets pertaining to profit and loss taking investors in order to maintain a certain level of return on investment for such stakeholders and shareholders as applicable, and hence is a tool for managing the rate of return risk, including displaced commercial risk, unquote.
Okay, so you distribute from it also to the shareholders. Okay, granted. Continue, please, Hassan.
Okay. So the next criticism is
So
about
take that definition and plug it in for the PER.
Okay, I will take it from Mateen. Okay.
Yeah, from the standard that he read.
Okay. Okay. Yes. So the next is the idea of the Islamic windows. So there is a criticism that conventional banks are using their interest-based income.
But
Yeah.
okay. Interest income. Okay, that's okay. That's another. But there is still in the deposits another issue that I don't know if you are mentioning it later or we already had it. Some Islamic banks, especially in the Gulf area, make the contract of mudaraba in such a way that the formal share of depositors is very small, like 2% or 5% of the profit. So the contract would say your share of the profit is 2%, the Mudarib share of the profit is 98%. But be sure verbally we will give you more profit. That will give the management the freedom to assign any profit to depositors, because they assign any share of the profit above the 2% that is contracted. Now, the supervisory authority didn't mind that, and the supervisory authority in these countries is negligible, as a matter of fact, did not protect depositors in these contracts, because literally the bank can only give them 2% of the profit, but actually they don't give them. And again, the supervisory authority always imposes on the bank to give them some reasonable rate that is compatible with the market, compatible with the prevailing interest rate on deposits in the market. So the final thing is that by this kind of contract and this kind of behavior, we are not really disclosing to depositors what is their share, either a priori or at the end in application. In the contract, it says 2%, but we really distribute to them more than 2%. And in the application, we don't even tell them what are the bases. And there is no basis other than the basis of being compatible with the interest rate that is being paid by conventional banks in these countries. This is the application by the 4 banks that existed in Qatar. This is what they do. Some of them give 2% in a contractual 2%, and some of them contract 5% to depositors, but actually all of them distribute more than that amount and distribute according to a secret formula that is determined by the management every year under supervision of the central bank, which really which empties the Mudaraba contract from its essence. It's no more Mudaraba contract. It is now, give me your money and we will give you what we like as profit. It's exactly like that. Give me your money now. And we are within the Sharia. We work on according to Sharia. So everything is halal, and we will give you what we decide as your share of the profit. Did you mention this thing in this matter?
No, Professor. This is not a part of my presentation.
Well, please, there is a master's thesis on this subject, and it deals with this distribution of profit in the Qatari banks. Check that that master's thesis and make that point, please, from it.
Okay, I will do that.
Okay. The writer of it is family name Jallad, something Jallad. What's his first name?
Yasir.
Yasir. Yeah, his first name is Yasir. Yasir Jallad.
Okay.
Master thesis in the year maybe 2016 or 15, 16 or 17. What? Okay. So the Mudaraba contract gives that low share 2 to 5%, not 2 only, I mean, make it 2 to 5. And the actual distribution is more, and the actual distribution is really at the discretion of the management, of course, under supervision of the central bank. So this foils really the Mudaraba contract. Okay. So go ahead. Continue, please. Now, the next point.
Yeah. So the next point is about the use of the income from the conventional banks to set up Islamic windows. Because the income is coming from prohibited sources, it is argued that this cannot be used for establishing Islamic window because the income is haram income. So I read in a book, one of the responses was that if a person doing any prohibited business intends to stop the wrongdoings and he intends to repent, then that needs to be encouraged. And from the Quran, it says, whoever refrains after having received warning from the Lord may keep their previous gains, in Surah Baqarah. And also, if you repent from taking interest, you have the right to retain your principal. So these verses are used to support the idea that you can use the conventional bank's income to set up Islamic windows.
Okay, now this second point in verse 275, this is hugely controversial. And this goes in, probably there is unanimous opinion in all schools of fiqh that this was, yes, at the time of the Prophet sallallahu alaihi wasallam, when you prohibit, when riba was prohibited, they were told, we are not going to account you on the previous practices. So whatever you gained in the past that is not related, and in the past it was not prohibited. There is a legal maxim in all laws almost, that you cannot apply the law on issues that happened before it. So before the prohibition, and that is the meaning of the verse, that before the prohibition, we cannot, we don't account you or hold you accountable for it. You don't need to reverse the transactions that you made before the prohibition. But now, since it was prohibited, there is no dispute that I am aware of among all schools of fiqh, all without any exception, that the al-haramu bayyin and al-halalu bayyin. What is not permissible is known. What is permissible is also known. If you earn anything that is haram, you have to return it. And if it cannot be returned for some good reason to the payer from whom you took, you have then to give it to charity. You cannot earn it. And this is on the basis of this, the purification concept is made. So whatever, that's that kind of application. Although we were in a discussion at one time, and Abdul Rahman Yusri said, oh, if someone want to change from conventional bank and make it Islamic bank, we will tell shareholders it's okay to retain the all the profit that you made in the past. But to my knowledge, the fatwa that was given to the founder of the Ahli Bank in Saudi and was given by the late Sheikh Ibn Baz, Abdul Aziz Ibn Baz, his name, right?
Yes.
I think, yeah, Abdul Aziz. He told him, you have to go back to your original 5,000 riyal, and everything else should be given to charity, because really you don't own it. So this is the fatwa also, and to my knowledge, there is no dispute on this fatwa. Now that religion is known, that verse applies to the time of the Prophet sallallahu alaihi wasallam only when they converted. And when the Thaqif came, the leaders of the Thaqif tribe came to the Prophet that, please excuse us to continue making riba, he refused to accept that completely. He told them, no, if you become Muslim, you have to quit riba immediately for anything from now onward, of course. And from the conversion moment onward. And then they did not accept that, and they were turned back, and they remained unbelievers. It is said in the seerah of the Prophet sallallahu alaihi wasallam that the following year the same persons came and told him, okay, we accept now, because apparently they had no choice. Everybody around them was Muslim by that time. So they accepted it, and Saqif, that tribe of Saqif, entered into Islam in that way. So this idea, no, please don't put it, to my knowledge, there is no dispute about it at all.
So, Professor, I have a question. So, you are saying that the conversion of conventional bank to Islamic bank is not allowed, and also making Islamic windows?
No, I am not saying that. Now, Mirza, please check in the standard about company, establishing a company, or musharaka, about musharaka in the Sharia standard of musharaka. Check in it, and there is a clause there by Awofi that says rightly, okay, and I fully agree with it, that says that we don't ask what are the sources of your funds, unless, of course, the law requires that, then we ask. In other words, in our history, and again, I claim, this is unanimous except for the Sufis. The Sufis make more reservation than the law makes, or the Sharia. There is, in my opinion, a unanimous agreement that, at all times there were prostitutions all the time. It existed, and there were, even in the Muslim land and in Muslim cities, there were some prostitutions that existed, not tolerated, not really accepted by everybody, but they exist. And these prostitutions, nobody said you must not sell them bread or housing or clothes or anything, although you know that their income is a wrong income. But you cannot really boycott them until they die. There is no concept of boycott in our Sharia. You don't boycott any person to die because of the sources of his income. There is a clause in this Sharia standard on musharaka that you can accept any person who got you money, unless you know that this money itself comes from haram. If you don't ask what is the source of your money. So we accept it is permissible. Rather, the first point that you mention here is good. It's better than using it in haram. If a conventional banks created an Islamic bank, and when Citibank created the Islamic City Investment Bank in Bahrain, with a principal of $50 million. It was accepted by Sharia scholars, and it has its own Sharia advisors also, that we don't ask it about, we don't ask Citibank about the source of their money. And besides,
but Professor, you just told just a while ago that it should be donated, or it had to be reversed, the
that's
gains.
for any person. Yes, for any person who earns haram money.
But conventional banks, we know for sure they were earning haram money.
Yes, we know, and they are required to give that to charity. But if they don't, we cannot. And if a conventional bank come to me to buy a property, say from me, and is going to pay me the price of that property, I don't ask it, where did you get this money from? It's none of my business, because definitely we know that the money of conventional banks, part of it is not haram. Even the earning of conventional banks, part of it is not haram, and part is haram. The major part is the haram. Yes,
Professor,
don't ask that question.
Can conventional bank for establishing an Islamic window, or conventional financial institution can give qarza hasana for establishing an Islamic window?
Well, this is what Citibank claimed, that we give it as qard, but we give it as qard to a Citibank, another corporation. That's a trivial thing, not a real thing. because if it is your own window and you call it loan, it is not really loan. And if it is your own subsidy that it is 100% owned by you and you call it a loan, it is not really also a loan. It remains owned by the principal. So from Sharia point of view, even if you call it a loan, yani that doesn't make a difference.
There's
Whether
a
you call it a loan or you call it a principal, we have no right to ask it, where did you get this money from? This
Professor,
is the point.
there is also concept of subordinated loan. It is usually done in the manufacturing companies and concerns that the directors provide loan under the head subordinated loans. It is interest-free loan.
Yes, subordinated loans are usually not by directors, by owners. Usually are given by owners. And director could be also a part of the owners. So owners, yes, they give, and these subordinate loans are at time of bankruptcy are have lower level of recovering than external loans by other people. Well, but even that, even if it is called a loan, it is still owned by the owners. So here, Citibank, when they called it a loan. In fact, yes, but they called it a loan between two corporations. From Sharia point of view, the second corporation is only a part of the principal, the first corporation, because they established a corporation, City Islamic Investment Bank Bahrain. And of course, legally, this corporation is independent from Citibank, and Citibank gave it a loan to take it for this corporation, make it as seed money to start its activity with. And you call it a loan, from Sharia point of view, is not really considered a loan. And honestly speaking, you can take interest from the subordinate corporation, take interest on this loan, and it's not considered riba, and it's not haram. So it's
And
not really considered a loan.
And secondly, Professor, for example, if the conventional bank is not in a position to give loan or arrange funds, arrange capital for the Islamic window, can Islamic window borrow in Islamic way through other Islamic banks also?
Borrow from other Islamic banks?
Yeah, take financing from the other Islamic banks to establish Islamic window.
I
Take
mean,
financing.
what is the sense of why should another Islamic bank give you money to establish a window within a conventional bank?
Not Islamic window, or we can say that establishing Islamic bank or something like that. Because I faced a case of this establishing an Islamic window of insurance company. It is Islamic Takaful window. So they first requested for a financing,
Well,
Sharia
let's
compliant
put it.
financing.
Let's first deal with the bank. Islamic windows are permissible by conventional banks, and the money they put in them as seed money for this window remains owned by the main bank, the principal bank, and that window is permissible whether they assign an amount on it or it uses the same resources and deposits that are put even on interest basis, but they don't pay interest on that. In other words, even if it uses the general resources that are available in the mother bank, then the Islamic window remains permissible. That's the point. And this idea of musharaka, there is a clear clause that in musharaka you don't ask your partner, where did you get the fund from? This is not your right. This is in the Sharia standards of Awofi, and this is clear. And this is the rule in Sharia. You don't interfere with that. You don't poke your nose in what other people do. What the bank does outside this window is none of your business. In the window, Is it permissible to use the same resources of the bank? In other words, if the Islamic window does not accept deposits and only provides financing in Sharia compliant, would that be okay? It doesn't have any resources of its own, and it only provides financing in Sharia compliant. In fact, this is better than all the activities of the conventional be interest based. Some of these resources are used for good reason then. So this is an improvement in the bank if it has a window and uses the same resources of the bank. Of course, if the window is going to accept deposit and distribute profit to these deposits, it has to have a firewall in its accounts between the revenues of this window and the revenues of the bank, because revenues of the bank are mixed. Good percentage of them are riba, and we need a firewall between them, so that the profit that is being distributed to our depositors is all halal. So the window is permissible on the principle that you don't interfere in other people's business. You don't poke your nose and tell him, where did you get this money from? Otherwise, we wouldn't have sold. Can you sell a property or sell bread to the bank, to a conventional bank? Yes, you can, of course. And even though we go beyond that, it is permissible to work in a conventional bank, provided you don't do any of the four functions that are mentioned in the hadith: writing and anything that relates to writing, including typing, including reviewing the draft, including the lawyer reviewing it from legal point of view. This is writing the contract or being a witness of it, of course, in addition to taking or giving the riba. These are the four functions that are not permissible, and other functions, you can rent a building to a conventional bank. Who said otherwise? And imam of mosque may say otherwise, but because of their ignorance, they don't know Sharia.
Professor, in IDB, we don't do in our projects, we don't lease the buildings to conventional banks.
But in IDB, you go in partnership with conventional banks.
Yes, but there is some inconsistency.
Yeah. No, it is consistent. It's not you take part that is permissible in a conventional bank in a project, and that is okay. That's not impermissible. And IDB doesn't rent anyway properties.
No, for the Waqf fund, the Awqaf fund.
Of course, the
Yeah,
Waqf fund, but all
yeah.
Awqaf properties in Turkey and in Syria and in Egypt and other Arab countries, northern Arab countries, very often are rented even to banks. Their main customers of the Awqaf properties are the banks. Whether here in Turkey or in other Arab countries, in the northern Arab countries.
Okay.
The southern Arab countries, this means the Gulf countries. But it's not preferred. I didn't accept to work in a bank, although working in a bank is permissible if you don't do these functions themselves. But that's a personal choice. Some people like to be more pure, which is good and better. But when you put the line, definitely the line is there. You do not ask your partner, where did you get your money from?
Okay.
So
Okay.
if a prostitute decided to repent, you can make partnership with her in a normal business that is, of course, in a permissible business.
Yeah. So, but Professor, actually, I was a bit confused because earlier you were saying that the Prophet, you gave the example of Sheikh Ibn Baz that he told to donate the profit from the conventional bank. So that's individual advice. But for a new venture, it's okay. But as
No,
an
no, the
individual,
point.
I should
No,
donate.
no, wait. A Muslim may not create any organization that deals with riba. That's definitely haram. A Muslim may not earn riba. If riba happens to come in your hand for some reason that is usually beyond your normal practice, then you should give it to charity.
Mhm.
That's a different thing. I am not dealing with Muslims here. I am dealing with another person. I advise him, whatever you have income from riba, put it there. But I don't question his money and tell him, oh, your money that you are putting it with me is from riba. I don't question that. I have no right to question that. Yani there is a difference between this and that. Of course, we call on any person who to in whose hand happens to be the haram income to give it to charity or return it to where he gets it from. But this is the advice, and this is the Sharia rule. And we tell even the banker, if you, Mr. Banker, want to do something good, do that. But if they put some money with me as partner in a project that is permissible, I don't tell them, I don't ask them, oh, where did you get this money from? Is it halal or haram? That's not of your business. That's the point. We don't interfere. We don't poke our noses in other people's business. That is rather haram.
Okay.
Not only unfair, it is haram. And the Awafi standard in Musharaka said it clearly. We don't ask that question. And you accept funds as long as you he is giving you fund. He doesn't tell you, oh, this fund is only from riba and I'm giving you only the riba. That's a different. If someone want to challenge me in this way, I wouldn't accept to be partner with him. And if if a conventional bank makes a window and put on the title of that window and on its sign the seed money used in this window is only from riba, and it is we got it from riba and we put it here as seed money for this window. Well, that I wouldn't accept to deal with this kind of window if they put it that way. Same way, if I know a person who has a liquor store, he lives on a liquor store, and he or a liquor brewery, and wants to open an account with me. If he tells me, oh, this account is for the liquor brewery, I wouldn't accept to open it in an Islamic bank. But if he tells me, I am XYZ and I want to open an account, I am John Doe, and John Doe want to open an account with me, and I know he is an owner of a liquor store, I open an account for him. And that is really better. I'm giving him even an advantage to taste the halal income in my in our activities. So maybe he will change his opinion. Maybe the whole bank will be converted then into Islamic after that. But we don't ask it. That's none of our business. We don't ask about the source of income unless we are required by law. Now we have this money laundering laws that exist in almost all countries. Yes, we ask that question to the extent that the law requires. And from Sharia point of view, we cannot ask. We are not required. We are not advised. Even it goes up to prohibition of asking the person, what is the source of your income? Gosh, in America, we had something like that, where some people would, you invite a person for dinner and he wouldn't, he stand, oh, tell me first that this food is halal before I can eat it. These are stupid people. I definitely wouldn't accept them in our ranks as Muslims. and even people like that, we refuse to accept them in the Islamic Center, in the association, as members of the association, because of this kind of behavior. You cannot make that behavior. You don't. It's none of your business. If your host offers you food, you either eat it or abstain. Don't eat it silently. يعني, but you don't accuse him. Oh, your source of income may be haram, or part of it could be haram. That's not our Sharia at all. So definitely, please quote that clause in the Musharaka Sharia standard that is clear in this regard. You take it
Okay.
from the Musharaka Sharia standard.
Okay. Okay. Thank you. So, Professor, we have the last issue of the Sharia governance and supervision.
Okay.
And yeah.
And just one moment, please. Jehon, you are with us, right? Right? So be ready, Jehon, to continue the discussion, please. We need to continue also our discussion on the other part. They are important. Go ahead, Hassan.
Okay, so the last point is on the Sharia governance, and the criticism is that the Sharia advisors' remuneration is not regulated across jurisdictions, and the Islamic banks are compensating the members of the Sharia Advisory Board, which may serve to legitimize dubious and non Sharia compliant activities and affect the independence of the Sharia advisors. Bakluti in 2020 studied concluded that because Sharia board members are compensated by the banks, their decisions are biased in favor of the bank. The competition for multiple Sharia board positions and the race to charge fees for Sharia pronouncements results in non Sharia compliant Islamic products. Azmat et al. 2014. Similar studies were conducted by. Yeah.
Before that, these claims have to be substantiated, because always Sharia board members will say, no, we are not affected by that. So this is a continuously common claim, and again, rejected on that basis. We need evidence for that. So can you find evidence? Do these papers have evidence that there were some Sharia activity or Sharia ruling that was made in favor of the management? Give me any Sharia ruling that was made in favor of the management. You see the point? So the claim definitely cannot be settled on that basis, on the basis that, oh, they are they take salaries from them, then they are biased. No, they may be not biased even though they take salaries from them. Now, I know, for instance, an incident. A CFO of an Islamic bank told me about a transaction that the transaction was really dubious, and the one member of the Sharia board discussed it. He told me the CFO of the bank said it was in my presence. I was there, and then he said, I am the one who also partially signed the check when we paid it. The check was for $750,000. The negotiation was between this member of the Sharia board and the chairman of the bank, that we want this transaction. It is important for us, and we want it to go. The Sharia member told him, but this is difficult. It has real difficulty. It has certain serious issues in it. But the chairman said, but we need it, and it is necessary for us. So then he asked him, how much do you pay? He asked, the Sharia member asked for $1 million. Then through negotiation, he went down to 750, and 750 was paid. And then the Sharia member told, he was not the chairman of the board, told the CEO of the bank that, well, do not talk to all other members. I will manage them. Just bring the issue to our meeting, and I will manage it. That it will pass, and the issue passed and was done, and the action was taken. That action for which this amount was paid. So, but this is only an individual witness. I was told by the CFO of the bank himself, who said that I am the one also who signed, because it takes, for such large amounts, it takes two signatures, the CFO and the CEO, both. So they signed it both. But I cannot put this in the record and say, oh, this is a record, because all I have is that individual business. I don't know whether that man, I mean, the three of them, now the CEO and CFO of the bank, and that Sharia member, I don't know whether they are alive still or they are dead now. God knows. But I know that incidents for sure. I know, of course, the name of the bank, which I wouldn't disclose it, but I know that this has happened, but only on the testimony of that person, of the CFO of that bank. Uh, so I don't know beyond that. We need intensive study here to show that. We may say instead this becomes, suspected, that there is a suspect, yes, and that suspect can be voiced and clearly can be voiced. There is a suspect that this may happen, but we cannot be sure really. We have other things that support. Yes, people taking too many financial institutions to advise. Yes, definitely. They don't have time to really advise them all. But people who take, and few of them can advise these few of them. Now, I know for sure that, again, in all banks, I wouldn't say only in the bank I advised, but in all banks, Islamic banks, in all of them, I know there were and there happened disputes between the Sharia board and the management. And there are things where the Sharia board rejected for the management. They don't accept everything from them, no. There are things that they were rejected, and they asked the management to make changes, make amendment, make this or that or the other. And very often, rarely it happens with the top management exactly, because top management always avoid to make any dispute with the Sharia board. They send instead some of the lower manager, like the manager of product development, and through him they work, for instance, that we need this product and this product is so and so, and they try to convince the Sharia board of it. That happens, and the idea could be, in fact, from the CEO of the bank or from the chairman of the board of the bank, but it goes usually through this lower management in order to avoid direct confrontation with the management. They make tests first. If that can pass, then it can be adopted by the higher management. So that kind of manipulation happens again, yes, a lot in all Islamic banks. But we need to be reserved on this. This kind of argument is a good argument. Yes, this slide, that definitely when you have too many institutions, you won't have really adequate time to advise them. There is another argument to it, the language barrier. Please add it here. I remember a banker, for instance, a banker told me, well, I know XYZ is a good Sharia expert, but I don't want to deal with that with him, because I have noticed, this is what a banker told me, I have noticed that this person is only Arabic speaking, he doesn't know English. And we were in a sitting and he asked another Sharia scholar beside him, well, is that text, is it okay? And you read it in English because the other one knows English. It is okay. He told him, yes, it is okay. So he signed, although he doesn't know what he is signing on, only on the word of another person. So, and then he said, I don't need two people. I need only that one that is English speaking. I don't need the one just to sign on the signature of the other. So this is where, yes, the language barrier is also an important issue, where some Sharia scholars, unfortunately, dare to sign only on the other testimony, and that is wrong. That I mean, the meaning of having different Sharia scholars is to have a committee and to have exchange of ideas, and if there is any differences, I mean, if I miss something, the other member may catch it. So we kind of help each other in reaching the right. So please add the language barrier. It is being observed in these kind of problems are observed in several Islamic banks and in several countries, especially when you deal with in non-Arabic speaking countries, and you have Arabic speaking of them. But
Okay.
again, yeah, Hassan, you need to add here that there are some mending attempted by some central banks. Ya Mirza or Ya Shah, if you know about what the central banks does in Pakistan in this regard, tell us about it. But I know, for instance, and probably all of you know, that in Malaysia, they require that no Sharia member can be in more than one institution. In Nigeria also, no Sharia member can be in more than one Islamic bank, or in one, again, insurance companies also are under the supervision of central bank in Nigeria, in many countries now. Again, no Sharia board can be member in more than one insurance company, Islamic insurance company. So that rule are being discussed by central banks. There are some mending, for instance, both in Malaysia and in Nigeria also, and probably in some other countries, the central banks make guidelines for the Sharia board, and make also arrangement that the Sharia board are urged or allowed at least to make complaint to the central bank directly. Yes, this may end up in firing this Sharia board member for the next period. But of course, he will continue his contract for that period, whatever his contract is, but may end up in firing him for the next period. Yes, but there are these kind of arrangements in attempts to at least partially mend this problem. But this problem, yes, of course, the language barrier is an issue. The taking too many institutions also is an issue. The leniency with the management can be expected unless we have clear evidence that in certain actions they sided with the management against what is Sharia compliant. So this is, yeah, we need to make the response in a way that is correct, that we won't be blamed for that. MashaAllah, khair. Yusuf Sawadi is calling me. Okay. So for Pakistan, is there any interference in this regard in the Sharia governance from the central bank?
Yes, we have
Yes.
Professor Islamic Banking Circular number 1, 2021, Sharia Governance Framework. Clause number 2, the Sharia board members except RSBM may serve on the Sharia boards of up to 3 IBIs in Pakistan. However, the IBI must ensure that its Sharia board has at least 2 members other than RSMB, resident Sharia board member, who are not on the Sharia board of any other IBI. Hence, each IBI will have at least 3 unique members in Sharia board, including RSBM, Sharia Religion Board, unquote.
So in other words, there are attempts to mending this. The idea of should be Sharia board member should be paid by the central bank. It may not work. Probably if we mend that idea in a better way, that they should be paid by a pool in the central bank, created from Sharia advisement fees the central bank charges the Islamic banks. In other words, instead of being employed and paid by the bank itself, they are employed by the central bank and paid from a fund that is created in the central bank by collecting special fees instead of paying directly to the Sharia board, they pay to the central bank, in other words. So these fees will be the Sharia board will be paid by the central bank, but from a fund that is charged to the Islamic banks in the country. That could be a practical also help or step in the direction of repairing the Sharia governance. Sharia governance, definitely the way it is bad, but in my opinion, the ultimate objective is to eliminate Sharia boards. In my opinion, there is no need for Sharia boards if we issue clear laws about Islamic financing, laws that define.
There is also, Professor, very restrict fit and proper criteria for Sharia board members. Is it applicable in other countries also?
In many countries, they are now adding that, like Malaysia and Nigeria, they are adding this, yes, that a Sharia member should be graduate from a Sharia school. But some of these conditions may really not be appropriate, to be honest, also. Because, for instance, in most Arab countries, people who hold PhDs in Sharia, there are many people who are a lot more knowledgeable in Sharia, and they don't have even any formal certificate. So when you don't have a formal certificate at all, and you are a
Yes.
Sharia board member.
For example, in
uh,
Pakistan, there are 4 requirements. Number 1, the Sharia advisor must be an experience of at least 5 years giving religious rulings, officially religious ruling with a stamp. He should have knowledge or at least be familiar with the banking industry. Number 2. Number 3, minimum qualification is Darse Nizami, higher education like MA Islamiyat, economics, or in the discipline of banking and finance may be an added qualification. This is the main requirement.
Even with these requirements, they are not really always adequate. There ought to be some flexibility in them, because in many countries we have a lot more better people who don't have any degree than people who have degree. And people who have degrees also, clearly the majority of them are really not. The Prophet sallallahu alaihi wasallam even told us about it, that human beings are like camels. Out of each 100, you can hardly find a good one that you can take it as a ride. And this is a correct hadith. So even among PhD how many PhDs in Islamic economics and Islamic finance have now? And most of them are ignorant, really, yet with the PhD that they carry. And it is in Islamic economics and Islamic finance. So there ought to be some flexibility to really realize that. Having, I don't know how the fatwa is given, how the style of fatwa is given in Pakistan, with a stamp and with that. Well, the fatwa is given in many other countries, not like that way. And having 5 years at least experience in giving fatwa, really, that also excluded or exclude the good, brilliant new graduate. Why not having good,
Basically,
brilliant new
they say
graduate?
that the advisor should be affiliated with some fatwa issuing institute. No, he's not giving from his house. He's sitting in his house and giving fatwas. He should be affiliated with some from Darul Fatwa,
Okay,
government
this is
approved.
worse. This is worse also. This condition makes it really worse, not better. Giving fatwa, a formal fatwa institute. What is a formal fatwa institute? It's definitely not unacceptable generally, and usually by the public. That's not the acceptable one. So that may be even worse, and that make it more bureaucratic. We know all, for instance, in Arab countries, well, the official mufti of Egypt or Syria or Jordan is always a crooked man, a man of the government. And
Then
really,
how come, Professor, we as a PhD of Islamic economics can become Sharia board member? Is there any way out?
yes, of course he should. He may be able to become, and he should prove himself. And we should give opportunity to new graduate also. Definitely, I wouldn't think that a condition of 5 years experience in giving fatwa in a formal institute is really a good condition. People are always known by their abilities, and when you have different people around them, know them very well, and they can really give testimony to their ability. There ought to be some scrutinization. Yes, there may be some in selection, some board members. One banker also mentioned to me that, well, I asked him, what do you think about tawarruq? He said, well, okay, tawarruq maybe here and there, and he was hesitant about saying tawarruq is not permissible, and it is clearly declared by the OIC Fiqh Academy that it is pure riba. He didn't say that. So the banker told me, based on that, I rejected this person. Even you, through discussion, through interviews, through asking about the person more around, and then so on, and you know that it's it is good to require certain formal degrees,
Yeah,
but it is also good with the formal degrees to have
yes.
some flexibility.
But one more question, Professor. It is written that Sharia advisor must have an experience of at least 5 years giving religious rulings. For example, if someone has a 6 years of experience of giving rulings from his home, he thinks that he's a Sharia scholar, then will it be accepted by the Islamic banks and by the central banks that he has experience of giving rulings, because it
Well,
doesn't have any backing of any Darul Fatwa?
yes, well, this is why I would consider that this formalization of the conditions of the requirement in the Sharia board member should be flexible. When you put them, you have to leave room for otherwise, for violating this condition, because there may be many instances that we find a person, like you said, giving fatwa and acceptable by the masses, by people as knowledgeable, a lot more than one who is associated with a formal institution of fatwa giving. Yani we all know, for instance, the Grand Mufti of this country is a bad boy. We know his fatwa is always wrong, and especially when it comes to riba. He gives fatwa accepting riba right and left.
Yeah, so
And this Grand Mufti of another country said that what the conventional banks give and take is not riba. This is investment, and this is halal. And he said, I myself would invest also in it and take that fixed interest, and this interest is not riba. Well, there are people who are associated for years with such institutions and gave this kind of fatwa. So
yeah,
the
Professor,
issue then,
few years back, I had a discussion with a very reputable mufti, and I said him that we as a banker, experienced banker, want to become a member of Sharia board based on our practical experience. So he said, no, you people cannot become Sharia board members. And I say, why we cannot become? Because first of all, you have to do a mufti course of 11 years, Darse Nazami course, learn Quran by heart, learn Arabic by heart, then you can qualify for Sharia board member. So I say, what is this? We have to go again, do
so
11 years.
anyway, what the central bank makes as conditions, they should be made with flexibility, not with strict conditions that do not allow going outside any of these conditions. يعني I think one of these conditions should be knowing some finance also. If they don't know finance, really, we have many problems from people who don't know finance. But yeah, Hassan,
Mhm.
what happened to the talk about tawarruq and Ina?
Yes. Okay.
Where is the tawarruq and Ina?
Did
You
we
said this is the last issue. Well, anyway,
Yeah.
Tawarruq and Ina should be here in this, and and we'll talk about it after that. Hassan, anyway, call me individually, please. Call me, and I want to talk to you on this same thing. The issue of Tawarruq and Ina definitely are not acceptable, and definitely, regardless of whoever says it, there is a fundamental the contradiction between the principle of Islamic finance and the Ina and the Tawarruq. Both of them are violation of the fundamental principles. And once we understand the principles, this is why I insist on the ownership theory of Islamic finance. Once we emphasize that Islamic finance is based on real ownership, and real ownership cannot be faked. And faked ownership, that I own it only for the purpose of getting money, that's faked. And here where uh, rightly, although not from any text, it's from the spirit of Islamic finance, rightly the Fiqh Academy of the Rabitatul Alam al-Islami, Muslim World League in Mecca. Well, Muslim World League is a Saudi organization. We may criticize Saudi government for many things, but that doesn't mean we close our eyes for the good things that may come also from it, either as a Saudi government or as institutions that belong to the Saudi government. So definitely, yes, the Saudi Muslim World League is a Saudi organization dominated by the Saudi government, ordered and financed, and they cannot do anything that is beyond the will and desire of the Saudi government. The Fiqh Academy in it is also part of it. Yes, completely. But even a clock that is not working gives you the right time twice a day. So the Saudi Fiqh Academy, or the Fiqh Academy of the Muslim World League, that meets usually in Mecca under the banner of the Muslim World League, in 2007 issued that statement rightly, extremely rightly, that tawarruq is haram, and tawarruq means riba, because, and this because is not derived from any text, is derived from all the collection of texts together, from the principles of Islamic finance, because the commodity is not intended for its own self. It says لأن السلعة غير مقصودة بذاتها أو لذاتها. So this rationale is very important. In Ina, definitely السلعة is not intended for its own self. يعني can we imagine the Prophet sallallahu alaihi wasallam would prohibit loan and a sale? Simply, if you add loan and sale in one combined transaction, it becomes haram, even though that you don't make any increase in the price of the sale to give a reward on the loan. So even if really the price of the sale is exactly the market price and not inflated at all, and honest, very honest, yet combining them is haram for that suspicion. So the Prophet sallallahu alaihi wasallam prohibited this combination for the suspicion only, and yet say Aina is permissible. How could it be? يعني, uh, even suppose it is wrong to attribute that to Shafi'i, and Dr. Abdul Azim Abu Zaid wrote a clear article and with clear evidence from the Shafi'i writings that it is wrong to attribute that to Shafi'i, that he said Ina is permissible, even if it means riba. Now, this is one. And two, even suppose the Shafi'i said it, we would say the Shafi'i is wrong in this. We wouldn't say that, oh, it is acceptable then. We cannot imagine a prophet who said that this combination for the suspicion only is not permissible, and yet the clear combination and without, it's evident, clear it is only a small amount of cash now for a small amount, a larger amount of cash later in the future. And this could be permissible? No, it cannot be. And the Prophet is guided by the wahi, cannot be contradicting himself. And definitely the hadith of نهى رسول الله صلى الله عليه وسلم عن بيع العينة are correct and acceptable and definitely must be implemented. So the idea of Ina and Tawarruq is probably the most serious issue among all these issues. Yes, you can say that the loose Sharia governance led to Tawarruq and Ina, and led to some transactions that are not really compliant with Sharia. But we cannot really base it only on that. We have to base it on the principles of Islamic finance and how they are to be implemented, and both Ina and Tawarruq that are dominant in many Islamic banks. And the third one that you should add, Ya Hassan, also is the issue of make a full section for these, like Shah was making in the original that I sent to you, things, full section for Ina and Tawarruq and for rejecting these, and the response to them, quoting OIC Fiqh Academy, quoting the Fiqh Academy of Mecca in clear terms and specific terms. So the practices, and then along with them, they are practiced sometimes under different names, like the murabaha what is it called? المرابحة الدولية.
commodity murabaha.
Commodity murabaha. Yeah, المرابحة بالسلع. Commodity murabaha. Recently, someone sent me from UK, in fact, whether this is permissible. I told him immediately, this is what is haram, exactly. So even if they call it commodity murabaha, and if they use palm oil, or they use shares, or they use copper and platinum from London metal market, or all these should be really, and you should add to it, please look how many companies are established in brokeraging this commodity murabaha and the similar tawarruq in London, and how much profit are they making. يعني several years ago, a banker in Saudi told me several years ago, about, I should say, maybe now probably 10 years ago or 9 years ago at least. He told me that each week we book about $1.3 billion in murabaha in London metal market, and we book it always at the beginning of the week. So that we guarantee the prices with our broker there. We guarantee that the price of buy and sell is the same. There will be no difference in the price. It is really fabricated in the full sense. So we need really to write it and expose it. This is part, and definitely these are not permissible. Add to them sale of debts. Again, I remember one of the members of the board of the Sharia board of Awofi in 2018. We were meeting, OIC Fiqh Academy was meeting in Al Madinah Al Munawwara. I went from here, in fact, was 1 month after I came to Istanbul. I went there to that meeting, and it happened on the last day of our meeting. The Awofis Sharia board started its meeting. I met one of the members of that Sharia board. I know several of them, but one of them told me literally, I am quoting that member. I think he mentioned, now this I am doubtful about it, he mentioned la'natullahi alayhim, about his colleagues he's talking. He said, well, they want to legalize sale of debt. I don't think Awofi legalized sale of debt, but they studied that issue in their 2018 meeting in Al Madinah Al Munawwara. He told me that member said they wanted to legalize it. Some members, yes, wanted to legalize it, but I don't think that they issued a statement on that. Anyone may correct me if I am wrong. I didn't check it lately. But I know for sure, and this is again personal information only, the former Secretary General of the Awofi, who resigned 2 or 3 years ago. He stayed for 3-4 years as a formal, as a Secretary General. He resigned, and he told one of my colleagues, I don't want to mention names, because that colleague, he himself was the one who told me that he told me, he sent me an email that I left this job because I selected committing to my religion more than accepting this position or continuing in this position, because that means he was under pressure to allow things that he believes are incorrect and should not be allowed. Now, one of it, when I met that same Secretary General in Tunis, I met him and told him, well, you have opened a new window for abuse by issuing the gold standard. I criticize the gold standard. I don't like it. I don't accept it. It really opens a loophole for trading gold without any the fulfillment of the condition that the Prophet sallallahu alaihi wasallam considered it required. Why did the Prophet make that condition of hand to hand when you deal with gold and other currencies? He said hand to hand, in my opinion, to reduce speculation on it. But now you opened room for speculation by allowing the wakala can be hand to hand. The hand to hand is done by the wakil, and the wakil is the storage area, the company that stores the gold in it. So the gold, when the company make you make a transaction, 1,000 transaction on the day. So the company's record, of course, it goes to the record of the company, sale, buy, that all speculative transactions on gold go to the company. Of course, it has to go to the company, and it comes immediately, automatically, in the same second that the transaction is done. Then we give from hand to hand. The wakil change record, because by the same click, the record in the wakil accounts also change. And so what is it? Does that mean we are really trading gold the way the Prophet wanted us to do that? I argue that the Prophet sallallahu alaihi wasallam made special things, special regulations for money and quasi money, because he want to avoid speculation in money and quasi money, because that speculation in money and quasi money affects the whole economy. And I consider this as a prediction from the Prophet, as one of his prophecies, that if we speculate on money, we may hurt the economy by that. So he wanted to avoid that. And I told that Secretary General, by accepting this concept of wakala, you are allowing speculation, because it makes it so easy. Now you can make 1,000 sale during the day, and the billions of gold are still in the same storage, and the record have changed 1,000 times. In each click you make, the click reaches there also, and changes in the storage company, changes the ownership with each click. So really, you make speculation by clicking, and that is that what is meant by the hadith of the Prophet sallallahu alaihi wasallam. So please, add this, also add the gold standard if you like. Yeah, Hassan, maybe useful to add it. But anyway, Hassan, call me if you like anytime after we finish this discussion. طيب, I think we close it at this point here, and we need to discuss a few points. The last few points, Jehun. Jehun, can you please share?
Professor, do you want to talk about this seniorage and fractional reserve, or no need?
Wallahi, yani, there is need really for it. Okay, let's have different opinions.
It's
yes,
very important.
Okay,
sir,
but anyway, Jehun, please be ready. Okay, go ahead for seniorage. Yes.
Okay, so one of the criticisms of Islamic banking is it is also operating under the same system of fractional reserve banking, and Islamic banks have the power to create money through the demand deposits, and this leads to the
derived demand deposits.
Derived demand deposits, and there is an argument that this leads to unjustifiable redistribution, and also it causes instability and inflation in the economy because the supply of money increases when the banks create this credit. The Fisher in 1936, he claimed 4 problems. Yeah.
I think we can pass that. We need to come to the discussion of this issue.
Okay, okay, please.
Okay, so past that, let's take the discussion of it. Now, do Islamic banks create money in similar way to conventional banks?
Yes.
No. I argue that no, it is not yes. It is no. Uh, because of two reasons. One, the Islamic banks cannot give financing more than the real transactions. So, in other words, Islamic banks are definitely committed to the real transactions, whereas for conventional banks can give to debt transactions, to transfer debts, to pay debts, to discount debts, to all these, you can give financing. So you can give financing for debt transactions. And second, you can give financing also for fake transactions like options and other imaginary or not true transactions. Okay? So all this financing does not exist in Islamic financing. So when they create money in Islamic finance, they create money in as much as there are transactions really in the market, not beyond that. Whereas in the conventional banks, when we take interest as the basis, we create money a lot beyond the need of the real market. So this difference is substantial. Yani if you want to quantify it, for instance, and take the proposition that is said by several writers that the interbank transactions, which are all interest based, are 11 times the direct financing that is done by conventional banks to the consumers and corporations. If we take this proposition and say it is 11 times, it means conventional banks can create 11 times money than Islamic banks. Islamic banks cannot create that much money. This is one. And creating that much money, is it hurtful or not hurtful? That is another question. Again, we need to discuss it. It is true. What do you do then? Why do you need banks if you make it 100% deposits, 100% reserves? What do the banks do? What's the benefit of a bank? Why don't we deal with the fiat money itself? The hard money, paper money, we deal with it, and خلاص, as we were 100 years ago. We were dealing with that all the time. So why do we need banks? Do banks provide additional service in a contemporary society? And well, okay, banks are a Western invention. That's correct. They are not Islamic inventions. We don't take them from our Sharia. We imported them from the West. But is that wrong? Isn't that the nature of civilization, that you always take from each other? Let's remember, for instance, the history tells us that 9 of the people who became popes in Rome have studied in Arabic Spain, and they were studying in Arabic. They were educated there. Now, okay, some of us, I am one of them, I am educated in America. Does it mean that I become Americanized, and these popes became Muslim? No, they did not become Muslim. They studied there. That is the nature of civilization. Societies that are more advanced give societies that are lesser advanced until things may change later, and then you get advancement. And when you get advancement, you also be selective. You take, especially with our Sharia, we take based on selection. We don't take anything that comes from the West. And this is why Islamic finance came about and what Islamic banks were created. If it were not that way, it could have not been created. Okay, so what is wrong with that then? Where is the problem? Uh, is the entity of a bank that accepts current accounts, is that entity is useful or not? If it is useful, burdening it with 100% reserves makes it really useless and makes it, we have to be charged for any service then. Truly, yes, you mentioned, Hassan, you mentioned from Muhammad Umar Chapra, the beneficiaries of the money creation. Who are the beneficiaries? Yes, those who bank, people who benefit from the banking services, banks, depositors, and shareholders. So bankers, people who deal with banks, even those who take financing, not necessarily having deposits, but people who take finance from banks, customers of banks, borrowers also benefit, not only strong borrowers, all borrowers actually. Yani strong borrowers is to make it dramatic only, but all borrowers benefit from
No, but
those.
Professor, only borrowers with a strong credit profile. Generally, with the people who are not strong, they will not get the financing.
No, they would. No, wait a minute. Strong borrowers, but يعني, I think there is a kind of semantic issue. If they are borrowers, then they are borrowers. Then they borrowed. يعني, it's not strong or weak. If they borrowed, they borrowed. And if they don't borrow, maybe strong individuals, you may say, who can borrow from banks. But that is then included into customers of banks, whether they are depositors or beneficiary of the financing of the banks. So customers of banks and bank shareholders. Now, definitely those, the non-banker uh, people who are not banked, yes, don't benefit at all from that. And no direct benefit from deposit creation. Only non-bankers don't get it. The needy doesn't. Yes. Well, uh, should Islamic banks be for the depositors and borrowers? I mean, use the word borrowers wrongly, and finance beneficiaries. Should Islamic banks for depositors, shareholders, and finance beneficiaries, or should they be for the whole society? This is a question. What do you think about it, Hassan and other people? I want other people to contribute. Shah or Muhammad Hassan Abbas or Ismail or Ala ad-Din or Jihun, everybody, please. Should Islamic banks be for the whole society, for the needy and the poor, for instance? Or
No,
should they be only for those people who can benefit from the finance and those people who give finance?
I
Who
think
deposit?
Sami.
No,
I talked.
not really, sir. An Islamic bank is also like a conventional bank. They have their own domain and their own functionality. It's not like a charity organization to work for the poor.
So this is not really, this is not a problem. If we say the needy and the poor does not benefit from Islamic banks. Okay, they don't benefit from Islamic banks at all. They don't benefit from the creation of money. Creation of money may give them additional profit though. Can this be made up through taxation? This is an issue. Which is better? Is it to make 100, eliminate banks? We don't need banks. If you make it 100% reserved, it means you don't need banks. You need banks that are mutual funds only, I contribute. I am an investor in Amana Mutual Fund. Amana Mutual Fund does not hold any penny as cash. All its money that comes to it uses it immediately in buying shares, and doesn't hold money as cash. In their balance sheet, there will be a cash, but this is cash because of the overnight. If you send them a deposit after 3 o'clock, they will not be able to use, they don't use it. And it should be, in fact, after I think 1 o'clock or 12:30, because Amana money is in Seattle, Washington, on the west coast of America. 3 hours after the closing, in other words. So if you send them the money close to the time of closing, I think half an hour or 1 hour before closing, they won't have adequate time to invest them. So, and that money will remain until next morning. Next morning, they invested. The same way, if you send them an order um, before 12 o'clock, they will accept that order and they will give you the money. They will sell and give you the money at the closing of that day. But if you send it after 12 o'clock, they will tell you, you cannot liquidate now. We will liquidate you at the closing of tomorrow. Because liquidation is always added at the closing, and also additions are done at the closing. So they need, for their accounting and procedure to make the decision where should they put the money, in which kind of share, etc. So Amana Fund doesn't hold money, and only hold shares in different kind of companies. So these, do we want banks to be like that? Are banks a useful entity in a contemporary society? I argue they are, yes, and they are needed. So the zero, the 100% reserves anyway is not. And all those writers, and they are all economists, all those writers who talked about 0% reserve have borrowed this idea from Western writers. Now, so it is not really something that is special to Islam or special. There are Western writers who argue for that. We don't need banks in any form the way they are. Banks are hurtful. Yes, banks are hurtful when they are based on interest. But are they equally hurtful if they are based on Sharia? That is, if they are connected on a one-to-one correspondence with the real market? I don't think so. I think it will be different. So we take the institution of a bank. I think we need the current account service. It is useful. Yes, I agree that the shareholders and all customers of banks benefit from the seniorage. I agree with that. But the solution of it, in my opinion, should be through taxation, not through 100% reserve. That is my
Professor,
opinion.
if you
Go
allow, I
ahead.
have a couple of points.
Yes.
I think you are inclining to the solution put forth by Umar Chapra of having the fractional reserve but applying a seniorage tax on the banks to be shared with the society, with those who do not benefit from the banking system. I think you are inclining to that. But my point is, even for the financing, coming back to this slide, the poor and the needy can actually and should be supported through microfinance, and they should be allowed the opportunity to have their own SMEs, small businesses. They should be allowed to be entrepreneurs. So I think there is a case that the poor and the needy should be supported by financing, even those who do not have very strong collaterals or who have a very strong history. But if they are entrepreneurs, if they are skilled, they should be given the opportunity to stand on their feet.
Well, uh, now this opportunity, does it require special kind of institutions, or commercial banks can do that? I believe, and probably we may agree all on that principle, that we need for that special kinds of institutions. Call them special banks, I don't mind. Have a special kind of institutions, call them banks, that's fine. And that should be done, yes, definitely. And this is an issue that relates to two entities in the economy: the entity of charity, which is awqaf, and the entity of government. So government and awqaf should create institutions that accommodate persons who may expose them to higher risk. يعني a depositor need not to be exposed to higher risk. Why should a depositor who intended with his deposit to make profit should be exposed to the risk of those poor and needy, that there may be, yes, abilities among them, and definitely, and these abilities should be given the opportunity. Should they be given these opportunities by by the money of the depositors who aimed at making profit, or should we be given by either the government bears that risk, or the awqaf bears that risk, or people who are willing to give charity? Same thing, yani, that the awqaf itself may be financed by also some people who may give charity, that if you lost your deposit with us, you don't mind, you don't worry about it. That could be because, yani, especially if we take the model of awqaf that exists in Turkey here. Awqaf institutions in Turkey are supported by two sources of revenues: revenue of the awqaf properties that are made for that objective, and donations that are collected from the public, and sometimes in mosques also, that they collect donations. People may give them donation to be used for the working capital, not to be added to the principal and generate revenue. So awqaf in Turkey have this kind of model. They have these two sources of revenues. So it could be we need institutions of this kind to support the microfinance and its likes. Do you agree, Hassan?
Yes, Professor, I think it's a good idea, but I think so far, our bankers and the elite, they have not focused on this enough. I think this has been a neglected area, and more work needs to be done in this area.
Well, and we should recognize also the work that is done in some places in this area, of course, depending on their capacities. For instance, the Bangladesh Islamic Bank has created a foundation for the microfinance, and at least the reports about it, that it is a very successful foundation. At the time that Grameen Bank was charging 54% interest on the poor, and the all banks, conventional and Islamic, were charging the rich about 14%. The Islamic Bank Foundation was charging the poor also about 15 or 16% only. So we need to recognize those experiences that are still rare, but they have started and they should be expanded. And definitely, Islamic banks are in a position to be able to create these institutions, probably most than and much more than other individuals, Islamic bankers. So Islamic bankers, yes, definitely, I hold them. And people like us, يعني, academicians and the like, we should work toward creating these ideas of charitable, not charitable, microfinance that is able to bear high risk, able to bear the risk of the microfinance utilizers. We need to create this. I agree with you that Islamic bankers, as they are today, do not give uh, adequate attention to this aspect. Okay.
Okay, Professor, finally, I want to just ask you about the Fisher's criticism. I think these are very important points. So, money creation is a major source of business cycles since the banks multiply their funds during the boom period. There is a expansion of the money supply, and then there is a contraction of money supply when the banks stop creating the credit. So this expansion and contraction of the money supply causes the boom and the bust and recessions. So how do you think, is this a valid criticism?
Well, do you see that this criticism is based also on interest? When money creation is done through interest, yes, you are creating money much more than what the market needs. And at the time of when the crisis starts or a recession starts, then you contract also quickly and you expedite the speed of the regression. Yes, that's the nature of interest. But would Fisher say the same thing if you tell him that what money created is only to the size of the real transaction that is done in the market, to the real production, buying inputs for the production and the real sale that goes in the market of the output? We are not creating money beyond that.
And there is no
Would
distinction between consumption goods and production goods. Both have the same impact on the economy.
I would say exactly they have the same impact. I wouldn't see any difference really, except in an economy. I used to say there when I was in Qatar, in an economy like Qatar, where all consumer goods are imported. So definitely, then the effect on production will take place in Lebanon, for instance, for food items, and in Japan for clothes and other manufactured items, cars and computers and whatnot. But it doesn't take place in the inside the same economy because the signal is given there. In these kind of economies, yes, in distorted economies, there may be difference between financing consumers and financing producers. But in an economy like Turkish economy, although 30% of it depends is external, depend on external input and also send, I mean, export also about 30% overseas. So still the economy produces locally and the signal is given essentially locally.
I see. Okay. One last thing is this: the governments borrow from the banks at interest, leading to the huge public debts. So the Fisher's plan, the Chicago plan, suggested that the government should create their own fiat money instead of borrowing from the banks at interest.
Because by borrowing from the bank, they are creating يعني a repercussion, several repercussions. But why? If they create fiat money, the money will go in the market and, of course, ended up in banks, and that means the banks will have much more ability to create their own money in multiple times, depending on the reserve requirement. So if the government issues fiat money for that, I think it's a lesser of an evil if it borrows from banks than if it issues fiat money. If it issues fiat money, it will give opportunity to banks to issue even much more their own derived money, right? So I think
Yes,
Fisher probably did not think of this problem, that if they issue fiat money, that will be a lot worse. Why
I
my
see.
battery? My battery or your battery is weak?
Oh, this is my battery.
Okay.
Okay, Professor, before my laptop shuts down, I think I need to rush to my charger.
Yes. Okay. Well, anyway, put it on charger. I keep it on charger while I am in class.
Okay.
Okay. طيب you made a good job, yeah, Hassan. And last week or last week it was. Also, Jehun made a good job. Jehun, we want you to complete. Let's take only half an hour. We will close at, wait a minute. No, we need 15 minutes only. We will close at 5. Where is Jehun? He's not with us? Let's Okay, so if he's not with us, we close now.
Yes, Professor, I'm here.
Okay, if you are here, come on then, and let's quickly take the last 2 points of the moral issue. We discussed though part of it even with Hassan, but
Uh,
the last 2 points that you have, the moral and the contribution to society.
okay, but I'm Mateen. I'm talking about my paper, summary paper.
You are talking about your paper. I thought, where is Jehun? Jehun is not with us. Okay, طيب Mateen, go ahead with your paper. Please summarize the summary in only 5 minutes.
Yes, inshallah, Professor. Bismillah ar-Rahman ar-Rahim. The topic of the paper is financial stability of Islamic versus conventional banks in Pakistan. It is published in 2018 in Al-Iqtisadiyat, Journal of Islamic Economics. Basically, the objective of the paper was to analyze and compare the financial stability of Islamic banks on 3 grounds. Number 1 is conventional banking system is more financially stable than Islamic banking system. This was the first point of discussion. Then whether large Islamic banks are more financially stable than large Islamic banks, means conventional large and Islamic large. Then whether small Islamic banks are less stable than small conventional banks. So the research paper is based on these 3 questions. The findings of the study is actually based on the method adopted by the authors is 3 methods. Number 1 is Z score, the results of Z score, the equity to total asset ratios, and number 3 is capital adequacy ratio. The 3 ratios are implied on the banks and the findings are discussed. So the findings of the research as mentioned by the author are that conventional banks are more financially stable than Islamic banks. This was their first finding. Secondly, the large conventional banks are more financially stable than large Islamic banks. The third finding is small Islamic banks are less stable than small conventional banks. So in the 3 categories, Islamic banks are conventional banks are more stable whether they are large or small than the respective Islamic banks. Then when the return of assets of the banks increases, the financial stability of the bank also increases. This is the general obviously understanding. When the volatility of the bank's return decreases, the financial stability of the bank also increases. This is also mentioned there. When the capital adequacy ratio of the bank increases or less than minimum regulatory requirement, the financial stability of the bank also decreases. This means that capital adequacy and the financial stability are directly related to each another. When the credit and operational risk of the banks increases, the degree of stability will be decreased. Means when the credit and operational risk increases, the degree of stability decreases, which means that their banks become unstable. Conventional banks have more potential of absorbing financial stability shocks as compared to Islamic banks on the basis of stated financial soundness indicators and Z score. So these are the findings of the study. Now, my critical points of the study are: the Z score is a good tool to monitor financial soundness of an entity. But when we use it for comparing big banks versus Islamic banks, this formula, from my point of view, does not hold, because the formula having total asset, retained earnings, have different figures. Their numbers are very big as compared to Islamic banks, which obviously returns into a good score for the big banks. Then Islamic banks, since they are new in the Pakistani financial markets. The author has not defined criteria about what big Islamic bank is and what small Islamic bank is. They have not made any difference that what is big Islamic banks according to the rating, according to the their turnover, and this. The matching of big Islamic banks with the biggest conventional bank of Pakistan does not make sense. So this is the crucial point. They have comparing the HBL, which is the largest Islamic bank of Pakistan, having more than 1800 branches. And then they are comparing Mizan Bank, which has less than 1000 branches. So this is not the true comparison, because HBL is working for the last 50 years in Pakistan. It was the first bank, and before Pakistan, the HBL was there. So it is not the true comparison between the new largest bank and the oldest conventional bank. The point number 3 is overall conventional banks indicators are better than Islamic banks. Reason may be that conventional banks are operating in the country for many decades, while Islamic banks are relatively new in the Pakistani financial market. Hence, conventional banks have sound financial strength as compared to the Islamic banks. Since Allied Bank, HBL, Faisal Bank, they are operating for many years as compared to the small Islamic banks or even the larger Islamic bank. So the comparison is not actually in a true sense according to the age of the banks. Critical point number 4 will be the focus of Islamic banks actually in Pakistan is not to compete with the big conventional banks, but to provide consumers with a full basket of Islamic products and grow accordingly, according to their own potential, according to their own capital, according to their own appetite, according to their own financial inclusion plans. They should grow according to their own plan. They are not targeting the biggest conventional bank that we should have 1800 branches, we should have capital, we should have asset, which turn into an infection based asset. So this is not the focus of the Islamic banks. Except Mizan Bank, all other Islamic banks are not able to attain high growth and work in a limited domain during the period under review. Even one of the bank, I think Al Barka, was in loss for many years, I think during the same period also. Their credit rating was low as well as their profitability. So the small Islamic banks have low rating as compared to the conventional bank. They have AA, AAA ratings, as HBL have AAA rating. Point number 6, that conventional bank have the business edge, that they can operate on thin margins, but small Islamic banks cannot. Means the conventional bank, they have a large customer base, they have the appetite to work on a thin margin, but just broadening their financing base. But the same leverage is not available for the Islamic banks, because they have limited customers. Their lending limits are limited, so they cannot lend on thin margin. They have to lend on a high cost basis as compared to the conventional banks. The legal lending limit of conventional bank is much higher as compared to the Islamic banks, because legal lending limit is limited to the capital, that how much conventional bank or Islamic bank can lend. The conventional banks have higher capital, so they can lend more, and their third party exposure is also high as compared to the big or either small Islamic banks. So these are my observations.
Fine. Thank you, Mirza. I would argue that really the main issue, comparing Islamic banks with conventional banks through whether the Z-score or any other capital adequacy or asset return on asset, return on capital, return on equity, return on deposit, all these criteria, do they test the differences between Islamic banks and conventional banks, or they test the the efficiency in management, in getting customers, in giving financing, etc., etc. Yani whenever we deal with numbers, are we dealing with the issues that are different between Islamic and conventional, or we are dealing with the how much the management is achieving? So it is not really, this is the main point. This is not a comparison between Islamic banks and conventional banks. This is a comparison between banks, not a comparison between Islamic banks and conventional banks. In Islamic banks and conventional banks, and you made a mistake, Ya Mirza, in saying the system. No, it's not the system. The system is not being compared in this. And this study, whenever you talk about figures, about numbers, then you are not talking about the system, because the system is not the one that makes numbers. The management makes the numbers. How much you outreach to customers, and how much you acquire customers and you acquire capital, etc., etc. But the system is something different. So when we talk about the system, we need to compare systems. And comparing the system, when we say comparing Islamic banks and conventional banks, then the essential idea, we are not comparing it. Then we are comparing banks with banks, not really Islamic or conventional. And any comparison of banks with banks will be through the numbers of them. Yes, and you apply the capital adequacy, you apply capital asset ratio, you apply a return on capital, return on equity, return on anything. And these are the criteria, obviously, and the Z-score. So when you apply these, you are comparing the efficiency of the management in this regard. You are not really comparing Islamic banks with conventional banks. And that goes all the way whenever you compare. Any comparison between Islamic banks and conventional banks should deal with what are the differences between them. And then test these differences. Do not test whether they have, and as you said it like everybody else says it, and it is wrong anyway, that the capacity of lending, Islamic banks don't lend. So they don't have capacity of lending. But because of the comparison is on the amount, it doesn't matter whether you call it lending or you call it receivable, because you are talking only about the figure. You are not talking about the difference really between the Islamic and the conventional. And then you may call it lending. Yes. So the idea here is these kind of comparisons useful? I believe they are useful, although they are misnamed. The title is wrong. The title is not Islamic and conventional banks. The title is between the management of Islamic banks and the management of conventional banks in Pakistan. Now, Islamic banks, then we can all say all these things. And even in all your criticism, which is correct, by the way, in this criticism, you did not touch at all about the differences between Islamic and conventional banks. The differences between Islamic banks and conventional banks is essentially in the nature of their contracts. And in the nature of their contract, the Islamic banks become attached strictly to the real market, whereas conventional banks are not attached strictly to the real market. Islamic banks cannot make the rescheduling with increment. Conventional banks can make rescheduling with interest, with increment. Islamic banks cannot borrow on interest for their liquidity. Conventional banks can borrow on interest for their liquidity. These are the kinds of differences that are between Islamic banks and conventional banks, but not really the Z-score, or the capital output ratio, or the capital adequacy, or the return asset ratio, etc., or lending capital ratio, etc. These are not really the criteria that that make the differences between Islamic banks and conventional banks. These are useful because, yes, I agree, very often the management of Islamic banks is generally lousy. Yes, very often management of Islamic banks is not efficient. Very often Islamic banks hire low caliber people, and that is an observation that can be tested through other ways, and then show that we have in Islamic banks in general, we have bad management, except rarely, yeah, very rare and very few Islamic banks. When you discuss, for instance, the relationship with customers, relationship, we have a thesis. I had a thesis, master thesis, by one of my students, again in Qatar, that compared four Islamic banks with equal size for conventional banks, not with the largest here and largest there. They took the equal size conventional banks, and definitely they found that the treatment of customers in conventional banks is better than what it is in Islamic banks, because those people who are sitting on the customer service desk in investment bank, in Islamic banks, are less experienced. They are still cheaper, hired cheaper, of lower caliber than people who are on the customer service desk in the conventional banks. Now, that comparison are useful to show that this management really need to be revamped, need to be redone, need to be restudied. There is an issue, a serious issue with management of Islamic banks, and that affect Islamic banking. Yes, it does. And this is probably why Islamic banking is not growing in the countries where it started, and it has been there for many years now, is not growing as fast as expected. Like here in Turkey, for instance, or in Egypt. The Egypt Islamic Bank was the second Islamic bank in the world, and yet, or probably the third, but definitely from that early time, from 1977. So with that, why the Islamic banking is not growing in Egypt and in Turkey? Part of the reason, definitely, the bad management of Islamic banks, and of course, the bad people contact, the bad reach out in Islamic banks. At one time, I remember I told that the CEO of the Jordan Islamic banks, why, guys, you are not reaching out to people? And generally, Jordan generally has higher religiosity among people, and you are not reaching out to all these people, and you could have done a lot more. But no, they want only to their own way of management, which deals only with the big and don't worry to dealing with the small. So, which is a bad management anyway. They don't reach out to masses. Yani, let's remember the main contribution for Barack Obama for the election money was from the masses, really. He collected from masses a lot more than he collected from the individual rich donors. And unlike the Republicans, they do only, like Trump, only from the few rich people, and they don't worry about the masses. But if you go to the masses, you will grow a lot faster, which a management of Islamic banks are not doing that here in Turkey and in the other way also. So these comparisons, wrong they are, as they are very wrong. They are misnomer. They do not really compare between Islamic banks and conventional. They compare between management of Islamic banks and management of conventional banks. Efficiency, call it, of management, which is fine, but don't call it comparison between two systems. It is not comparison between two systems, but misnomer as they are. Yet, in my opinion, they are beneficial. They are useful because they hit on the head, if they can feel that, of the managers of Islamic banks, that they should do a lot better than they are doing now. With this, I close. If there is no question, we close our day. And if there is any question, please go ahead quickly. We can tolerate only 5 minutes. And if there are no questions, see you inshallah on Saturday.
Sir, there is one thing, really, the Islamic banks are using their excess fund with the conventional banks. They are putting it in a sense that they are considering that conventional bank is not fully un-Islamic. There is something which we cannot say that this is contradictory to Sharia. For example, they own some assets. So if they own some assets and they are giving some certificates based on those assets to us, so we can put our excess liquidity with them. So is it fine, sir?
Yani, the way you put it, it's not fine. But in fact, it is fine. Because it is, if they own asset and they issue conventional bank based on this asset that they own, or they want to acquire asset. We don't want to go into sukuk ina again, but if they acquire asset, they want to acquire a new high rise to make it headquarters for a conventional bank, and they want to finance it according to on sukuk, and they issue sukuk, and an Islamic bank purchases these sukuk. There's nothing wrong in that, of course, as long as they are profit maximizers. So what is wrong with that? There is nothing wrong with that. But what Islamic banks do is not that really, because of their inability to invest all their funds. And this is another point